afternoon, Namibia and the world, and welcome to yet another session here at the Government Information Center. My name is Desire Kahia, and I am your moderator for the afternoon. And today, we're taking a look at the safe usage of money during the festive season. It is definitely upon us. Many people, as they're saying, they have already entered December. So we would like to just have a short discussion to kind of advise people, warn people, and also just assist each other on the do's and the don'ts, if possible, with regards to money, so that we do not have to come and struggle in January, especially when the little ones need to return back to school. In the studio, I do have three panelists here that will be assisting us to answer a few questions that pop up with regards to how we can go about to make sure that we save ourselves from the heartaches of January. I do have Mr. Wissel Kotze. He is the head of Training Academy for Distribution Affluent Market Agency at Sanlam. Good afternoon, sir.
Good afternoon. Thank you for the opportunity.
Thank you for being here. And we also have Ms. Christina Kauhondamwa, and she is a chartered accountant. Good afternoon, ma'am.
Good afternoon, thank you.
And last but definitely never the least, he is Mr. Ndangi Katoma, and he is a managing director for the Retail Mass Foundation at Old Mutual Namibia. Good afternoon, Mr. Katoma.
Good afternoon. Nice to be here.
Thank you. And we kick it off with the basics, really. And we're looking at the principles of financial literacy. And these are, you know, your simple earning, the spending, the saving, borrowing also is included there. And we want to find out then, as these are pertinent elements for something that we refer to as financial literacy, and this is very much the should I say, the main key elements in the initiative that is run by under the Ministry of Finance, I believe, if I'm not mistaken, with the collaboration of many stakeholders in the financial sector, especially also the insurance sector. And we would like to then find out from our representatives from these organizations, from your experience and general observations, what is the awareness level of Namibians when it comes to these principles that we mentioned a little earlier on? Mr. Katoma, we can start with you.
Sure, thank you, Desire and listeners. I think this is a pertinent question, and the public awareness on these principles are key. Just to start with, Old Mutual is part of the platform member of the Financial Literacy Initiative that you have referred to, and we have been supporting the awareness raising activities over the years. But beside that, we are also running a survey on an annual basis. It's called a Saving and Investment Monitor Survey in Namibia. And the recent one was conducted in 2021. And the primary purpose of that is to get a sense of and understand the savings behavior and financial attitude of working Namibian across the country. So to answer your question, therefore, some of the key findings that coming out and answering this question is, and I'm only going to highlight three. One, more than half of Namibians have admitted that they are constantly worried about losing their job and losing their income. And perhaps that's not surprising, particularly when one considers the impact of COVID in 2021. Secondly, 70% of Namibians says they work strictly according to a budget, and that's a good news if it indeed happening in practice. And lastly, 52% of Namibians feel that one can never financially be secure if you do not earn a lot of money. And perhaps that explains also why 23% of Namibians are said to have a sideline business in addition to their normal job. So I think the awareness is fairly fair.
Okay. Mr. Kotze, you want to add anything to that?
Yeah, I think it's very important to realize that the public out there do not realize what is the situation currently in, especially retirement. If we can talk about retirement, is that only 6% of people can retire comfortably. And so that means that out of 100 people, there will only be 6 people that could maintain the same living standard. And as my colleague said, I think that is something that we need to bring out there, and we need to educate the public to make sure that we do not need only to lean on the government pension.
It's scary. 6 out of 100, if we're to get practical here. Okay. I think I need a bit more education because I don't think I want to be left in the 94. Up until the Lord decides I need to maintain some form of comfortable living. We're speaking about the festive season here, and I would like Ms. Kauhandamwa to enlighten us on the correlation between savings, investment, and funds availability for festive season expenditures.
Thank you very much for the question. I think there's a high correlation between someone that has savings and investment and having money available to spend during the festive season. First and foremost, we need to understand that festive season is associated with high income or high spending patterns. So, and for an average person that is either confined with their budget or living paycheck to paycheck like we call it, they either need to cut their existing expenses or they need to dip into their savings to be able to fund their expenses. So having savings or investment to lean on is actually having a savings nest. So someone that is likely to have the savings and investment to lean on has a better chance of getting through the festive season, and they're also likely to stick to a budget as opposed to someone that doesn't have. So if you don't have the discipline to build up savings or expenses up until that point in time, you're likely to run out of money during the festive season. So there is a high correlation.
Okay, okay. Mr. Kotze, you see, Ms. Christina now highlighted, you know, the correlation, the comfort if somebody has this savings nest and so on. But I would then like to find out from you, what does influence the increased rate of spending that is observed from our citizens during the festive season?
As he said, to add on to that is that the festive season can be very hard and heavy on your purse.
Yeah.
And what is happening? So retailers is pulling all stops out, all the glitters and everything in the shops. We are in this festive mood and we want to spend. So I think this is where it's so important to realize that just stay calm and stick, and do not become so excited about what's happening out there that you just spend. And I just want to add on to that. I think it's very important for us to have a spending plan. Spending plans sounds better than a budget. Budget is so frightening. I think if you can have a spending plan, it's actually better. Then you first spend, and then after that you save, and that's the problem.
That's true. That's true. It's, as you said, it sounds scary to have a budget. I think I am definitely going to adopt the spending plan concept. That sounds safer to my ears. As we always say on this platform, it's a conversation that we're having, and we would definitely love it if you can join us. So please be reminded that we are live streaming through our social media platforms, and via these platforms you can make your comments or even ask any questions that you might have with regards to the topic that we are having this afternoon. On Facebook, you can find us at Ministry of Information and Communication Technology, Republic of Namibia. That is on Facebook, Ministry of Information and Communication Technology, Republic of Namibia. You can also find us on our YouTube platform. We are also live streaming via that platform, and our handle there is MICT Namibia. MICT Namibia, that is on YouTube. While we wait for you to join the conversation, I continue here, and I would like to find out from Ms. Christina, based on past spending patterns that you have worked with, observed, calculated, analyzed, whatever the case may be, how much does the nation actually spend during the festive season, and how does this spending impact the Namibian economy?
So to get to the exact number of how much we really spend, that would be difficult to answer, because obviously it depends on various income levels, but generally higher than normal. And like for most of the retailers, this is where actually they optimize their sales. So in as much as it has a negative impact on your individual purse and how you survive January, it actually does contribute positively in the economy. There is more money being spent in the economy, circulating. The people that are doing business over the holidays are generating an income, and hopefully they can then reinvest, and a dollar generated or reinvested in the economy will go a long way. So generally high spending patterns, but for a lot of people also savings dies completely in the festive season and resume beginning of February and February when everyone has recovered. So definitely high spending patterns there.
You know, there's this, is it slang? How do they call it? Like the beginning month is the month of worry. So it's January. But in December, we're babalicious. So I hear your point when you're saying the concept of saving completely disappears. And I think it's based on the excitement that you earlier spoke about. We get so excited, and the glitz and glamour actually blinds us from what we, what we're used to, the sane brain, as I sometimes call it. Now, Mr. Katoma, and maybe Mr. Kotse here can also assist with that. What advice would you give to the members of the public who withdraw money from their savings during the festive season?
Yeah, well, I think that's a very interesting question. And obviously, there is some peace of mind in achieving, saving a certain amount of money that you set aside for the day of emergency. And this is especially true if your saving attitude meet what I call a popular rule of thumb, which is really to have enough money set aside to cover 3 to 6 months of your living expenses.
Yeah.
But it's understandable that many Namibians have been using their savings to keep up with the increases that we are seeing. Cost of living going up, particularly over the past year. And therefore, it's true that this may be causing also anxiety among society and when you deplete your savings. So what's important, therefore, I think, is ready to make some key adjustment. Key adjustment now and develop some systematic approach really that helps to guide you when you actually dip into that savings. And find a way to replace and grow your saving again, because that is really what I believe is saving management. And it's important to have that saving management plan, because if you don't have it, your emotional spending get out of check and out of balance. And we all know that the biggest hurdle possibly between us as individual and our financial goals is exactly not having that. Yeah. And we need to sacrifice some benefits today, in order to make way for tomorrow, tomorrow's future.
Okay. Mr. Kotse, anything you want to add to that?
Yeah, I think the golden rule is never spend more than your income.
Okay.
And if you think about it, is that it's actually very simple, but never spend more than your income. And then another thing is a thing that we must stay away from is credit cards and lay-bys and all that things. That means already that you actually cannot afford it. If you buy on your credit card.
Exactly.
So I know it's difficult times to save, but let's ask the public out there, if you only put out just a little bit, at the end of the day, it will help you to go on that lavish holiday in 2024. Yeah, no. I think it's too short now, but that's planned for 2024.
No, I hear you, but now I'm thinking to myself, okay, fine. The day-to-day expenditures, or let's say the monthly expenditures, don't necessarily go because it's festive season and now you want to spend on something different. So they're still there. That is where your general income goes to. And hence maybe the need for some to tap into their savings or investment pockets or so on. So I would then stick with you, Mr. Kotse. How would you advise a person, or what would you advise a person to have as their stopping level when they're dipping into that savings? Not necessarily for, let's say, to, as Mr. Katoma mentioned, like a lot of people have of late really been forced to, go into that savings pocket type of thing. But now specifically when we're looking at spending for festive season, or these pleasurable spendings, is there maybe an advisable mark that you would say this person should not go beyond? Like, do not go beyond the 50% margin of your savings when you're tapping into this pocket.
Oh. No, I think that can become very interesting. When I was preparing for the session, I read an article that said, holiday without breaking the bank.
Uh-huh. That's a nice one.
So that's very important. But I really think people need to distinguish between wants versus needs. And that's so important to do that, differentiate between that. And then go back to the savings. I think it's very important not to stop with your savings, with your spending plan. That's so important. And then I think with my colleague from Old Mutual, we really want to accommodate the public out there with premium holidays, that they assist them during January, not paying a premium. And that also helped to make the burden a little bit lighter on their pockets.
Yeah. Wow, that's very generous. That's very nice.
And I think that's something that the public must know out there, that they can make use of.
Those holidays.
That will help them.
Yeah. I learned something new today. Premium holiday. I'm definitely going to consider that. Now, Mr. Kotze, you spoke about needs and wants and so on, and that actually brings me to my next question that I would like to then to have Ms. Christina, maybe you can assist me with that one. How can one then, because there is something that we keep hearing about, which is your 50-20-30 rule, and this basically speaks to division of with regards to percentages, where 50% is allocated to needs, 20% is allocated to savings, and 30% is allocated to wants. But now, maybe, Ms. Christina, you can give us an example of how one could apply this rule on a personal budget, and do you think this would really help Namibians plan better for their festive seasons or holidays, for example?
Yes, the 50-30-20 rule is almost synonymous to the bucket method of budgeting. It's sort of like a concept where you compartmentalize or you put your money into envelope. Traditionally, people would put in envelope and say, this envelope, this envelope, this envelope, food, electricity, perhaps school fees. And once you've depleted the envelope, it should end there. So the whole concept of 30, 50, 20% is to help you have boundaries of how far to go. So if we are saying 50% of your monthly earnings must go to your daily expenses, if you find yourself that you are going beyond the 50%, it could potentially be indicative that you're living beyond your means and you need to cut it down. This may, vary from maybe moving to a cheaper apartment, perhaps downgrading the car that you drive because it takes a lot of petrol, whatever the case may be, is to just make sure that you're not going beyond the guidelines. And with regards to the debt repayment, if you find yourself that you're going beyond, let's say your debt commitment is beyond 30%, it could also just be indicative that you are over-indebted and then you are at risk of defaulting on your loans. That means that if you are out there going to look for maybe a new credit card facility or going to buy furniture on credit and you already have a house loan or a car loan, then you need to evaluate, perhaps I don't need to take this, this, and this because it's pushing me beyond that. And also just having that, 20% bucket of wants and needs. That is where now we accommodate the holidays that we're speaking about here. Because remember, we all know December is going to come. It's not a surprise. So why not just putting a sinking fund to say, of my monthly saving, 300 is going to go to savings so that when I go visit my grandparents in December, I'm not buying them groceries from my current month, but rather from that sinking fund that I had put aside for Christmas. So this principle really helps because it helps you stay within limit, and it's also sort of like works as a gauge to say, if I see myself going beyond this, I must come back so that I can always stay within my principle. So I really like the bucket method of budgeting because it really helps.
Okay. Like, Mr. Kotze said it's a bit late, so we can consider some of these things from February next year. So I'm definitely going to look into trying to, apply that to my life. It's an experiment waiting to be carried out. As we said, we're learning, we're teaching each other, and maybe you might have some form of advice for somebody else out there that could work, or also just have a question on a struggle that you might be having with some of these things that we mentioned, that the panelists here can assist to maybe nip and tug here and there for you. So please do communicate with us in the studio. We are opening up our lines right now. The number here is 061, that's the area code for the region, 400-397. That's the call line number, 400-397. Area code is 061. You can still find us on Facebook, and we are at Ministry of Information and Communication Technology, Republic of Namibia. We are also on our YouTube platform, and our handle there is MICT Namibia. I continue with Mr. Kote and Mr. Katoma here, and we want to find out with regards to what your organizations are doing, specifically with credit approval, because we want to know, does your organization ensure, or how does it actually ensure, that when you're giving credit to your customers to invest and save, how do you ensure that they don't take credit for consumption purposes? Like, have you put in place? Mr. Katamo?
Yeah, if I may, I think two things. For us, one of the key things that we do is to help raise financial awareness among the public. And Old Mutual has a free financial education program. It's called On the Money, which we basically present to institutions and corporates together with their employees. And the whole purpose is really to help to simplify, these financial principles that will enable people really to make sound financial decisions. But secondly, we also have the accredited financial advisors that provide free financial advice, to individuals and really help them to make better plan, for their present and for their future financial needs. So when people engage these financial advisors, they begin to appreciate first the value of having an advice and take decision based on this advice, because that's ultimately what's going to help you to have your financial needs attended to.
Mr. Kotte?
Yeah, I actually want to elaborate on that. We as Sanlam also do have our financial advisors that's been accredited. And I think the important thing is we really make sure that our advisors has been accredited well, so that they can create that trust between the client and me as a financial advisor.
Yeah.
You will know yourself, I do not ask you to answer it on screen now, but there's a stigma on financial advisors, that you are there to come and take my money.
That's true.
And so what are we going to create that trust between myself and the client?
Yeah.
So that's the first thing. The advisor must really not be a fly-by-night. It must be something that I can walk for the rest of my life, and all the decisions is based on a long-term relationship. I think that's very important. And then secondly, we have just introduced a new initiative in the company called financial wellness training. So we do financial wellness training all over the country with bigger companies, where we engage companies to contact us, and then we educate the employees, and at the end of the day, so that they can make an informed decision about the future. And I think that's very important.
That's quite important, actually.
Yeah.
So it's like a futuristic education that changes the approach, the mental approach of the individual.
Because there's a lot of things, and my colleagues, I think, if I can call colleagues, will agree with me that people do not know what is a will and what is happening with a will and estate administration, and there's a lot of things that's really important for cover the unexpected, save for retirement. If I can share with the public is that if you want to retire comfortably, out of 1 million, you will receive a monthly income of around about 6,000 per month. So imagine how much money you need 6,000 times 5 comes to 30,000.
Wow.
Okay, so it's a lot of money. And
Yeah.
I think public must know this, eh?
Yeah, it's true.
Yeah.
It helps them to plan better, actually.
I think that's so important.
And also to ask yourself twice if you really want to go and withdraw that last $1,000 that you can use for savings purposes for the future. We've got Anytime on the line. Good afternoon, Anytime. You are calling us from Tsumeb, I believe. How's your day today?
My day is fine. How are you, Madam Kahia?
We are very well. How would you like to add to the conversation today?
Yeah, mine is just, I've just developed interest to call in, and I've listened partly on the presentations of planning for the festive season. Mm-hmm. Yes, they are quite right, but the experience that I have, not only me, I think, when it comes to marketing the policies, yes, they are really, convincing the public. But now, my problem that I experienced is that once it comes for time to claim, like they're indicating that one can save for this festive season. Now it's my time now to come and claim. There are complications now there.
Okay.
It's not easy now to withdraw from such, savings. They'll demand a lot of things, this and that. Why is it like that? It's just like the banks. You open. I'm just giving an example attaching to this from the insurance, whatever companies. Mm-hmm. The bank, you are opening a fixed account or the 32-day notes account. But when you want to withdraw from that one urgently, there will be some complications towards that withdrawal. Now, I don't understand it. The money, they know that you present the ID and the cash card. Same applies to the policies. Why is it that there are complications when you want to withdraw from such policies?
Okay.
Yeah, thank you. Maybe they can elaborate on that one.
Okay. No, thank you very much, Mr. Anytime. I will pose the question to our panelists.
All right, thank you.
I trust we got that one. It's basically one question, just given two different examples of institutions. I don't know who wants to take that one.
I could maybe take the fixed term deposit one. Mm-hmm. And there's something that I've actually noticed. He mentions a very good point by saying that you go to the bank, you take out a fixed term deposit, but when you want to draw money urgently, then there are complications. And I think that goes a long way to make sure that we also understand the type of investment vehicle you are using, mm-hmm. and the goals that you have. Exactly. You cannot have emergency saving and a fixed term deposit, because the way a fixed term deposit works is you put money for a committed period of time, mm-hmm. and then when it matures, you are going to draw money from that. So you'd have people using fixed term deposit, 32 days account for emergency savings. Mm-hmm. And when the uncles passed away, they are trying to facilitate the death certificate and hoping the bank actions on it. And when the bank says there's a 72 waiting hour period, and the client is frustrated. So I think that is the one thing that we need to understand. We need to understand that, yes, there are various saving vehicles with all institutions, be it banking, investment, community, mm-hmm. but we need to be able to match the goal to the term so that we don't end up getting penalized. And I personally also, when I started working, I took out a 10-year investment with Old Mutual, and thinking I'm going to buy a house in 10 years. And 4 years into my career, I decided, you know what, I'm ready to buy a house. I went back there to get my money back, and I got 5,000 penalized because I am early withdrawing from the investment. I was quite upset about it. But when I read about it, you didn't give this institution enough time to invest your fund for them to generate you the return they guaranteed you, and you are breaching the term of the contract. So we need to make sure that we don't put all our savings into one, mm-hmm. especially fixed type instruments, because if you're using it for emergency purposes, then it's going to get a bit trickier when you come and withdraw. You might get your money eventually, but you get less than what you put in because of the termination clauses and the fees, mm-hmm. and there might be a waiting period because someone else needs to sign off that, withdrawal. It's not just a click of a button. So that's just what I wanted to add on that aspect.
Okay, no, well put, actually. Mr. Katoma, you'd like to add?
Maybe just to add to what she said. Again, perhaps this underscores the importance of engaging with a financial advisor.
Very true.
Because you got to understand what is your need, and therefore, what is the financial solution that actually talks to your need. so that when that need comes, it is not going to be a complication. But when you don't understand that, you will end up taking products that you think it will do what you plan to do, but actually it is designed differently. And this is why also it's important to, do you want to save or do you want to invest? Because the two are also different.
Yeah, very true. Very true. I hope, Mr. Anytime, I hope you've gotten a bit of an enlightenment there with regards to the question that you had posed. Please, anybody else, you can and you are welcome to add your comments, and also, if you have any questions, to pose them to the panelists that we have in the studio today. The number is 061 is the regional code, and then 400397. 400397 is the call-in number here in the studio. We continue, and we would like to find out then from Ms. Christina, on average, just from, I think, from general experience and so on, how much should a modest family of about 4 people save per month for a festive holiday?
Well, that would depend also on average what that family likes to do. So on, like, some families' holiday is about staying at home, spending time with family, and cooking up a feast. So that might not take as enough, it might not take as much money as a family that believes festive season is traveling to the coast, spending time on the beach, etc. So I think each family must contribute according to their savings, to their goals of what they want to do during the festive season. But on average, have enough money that wouldn't allow you to dip in your December salary to the extent you are going to breach your commitments in January. So enough money not to default on your loan, not to have enough petrol to go to work in January, and not to pay your school kids' fee when they are due. So it really does depend on situation to situation, and also whether you are spending festive season in a town setting or you are spending it in a rural setting, because Christmas as a village will cost half the price than Christmas in town, because there's only so much you can do in a rural setting or in a camping setting as opposed to when you are at the coast, for example. So it really does depend.
So it's basically one of those concepts where, if, hypothetically speaking, if you are planning to do something in the festive season, it's advisable for you to maybe start having an idea of what it is you want to do as early as possible, to facilitate the cost implications and the savings therefore. Is that mindset close to what the reality is supposed to be?
Yes, because we shouldn't really be waking up in November and deciding what to do in January, because like you said, your other expenses don't disappear out of your budget in December. So over and above your normal expenses, you need to now accommodate this increased expenses, and you can only do that either by increasing your income, which is highly unlikely, or by dipping into your savings, which you are trying to discourage by making sure that people are really using their savings for the goals that they actually intended to the savings for.
We have another caller on the line. John from Katima, good afternoon and welcome to our session this afternoon.
Yes, good afternoon. Thanks. My comment is about the 32 days saving with the National Bank.
Sorry, come again, sir. Your comments are based on?
32 days saving.
Okay.
Yes.
Before you continue, I would like to just highlight that we're not necessarily having individuals from these various institutions. So the answers that you would get are basically very general from an expert perspective of the industry, and not necessarily the operations of the specific institution that you are referring to. So I would like you to just be advised on that, and maybe just keep your question on a general perspective, not necessarily institution specific.
All right. Yeah. Okay. Thanks very much.
Okay.
Let me make it general. Okay. I go to open a saving account, right?
Yes.
Anyway, where money is involved. So at times that I'm having a problem, I go there. My terms are that before I get any money, I must put in a notice, or it's after 2 years or after 5 years. But when I go there, I'm still getting, I will still get the money. They will give me that money, and don't know, we'll charge you certain fee for emergency withdrawal. Now, to me, I don't see that is a good thing, because when you open and saving for certain period of time, they must reject us from getting that money.
Okay.
Yes, yeah, that's my point.
Okay.
Yeah, because it's not useful that I put this period of time for me to do something big.
Mm-hmm.
So, but they're still allowing me, if I come with any reason, to claim the money. So it's like they're killing my dream for what I planned for. So at least I must just try to put that policy into work, that no, if you invest money that period of time, you can only get that money that specific time, no matter what circumstances.
Okay.
Yeah.
No, we hear you, John. Thank you very much for calling. He's got a point, kind of. Mr. Kotze, maybe you can assist with that one.
I think, and I'm not so clear exactly on the question, but I think it's important that we need to understand what is the money for. Mm-hmm. That's the first thing.
Okay. Just to enlighten you on that point, because we had a bit of a hearing, we couldn't hear him quite so well, but I got what he's saying.
Yeah.
He's basically saying that, okay, for example, if I come into this institution and the type of package that I'm applying for is a savings for 5 years, why is it that when I come back after a year, this institution is giving me the money if the plan was supposed to be for 5 years? Why do they allow for that? That's basically what he's saying. Like, can't those rules be changed, or, you know, stricter or stringent measures be put in place to deter people from coming back before that particular time frame has met?
I understand 100%.
Yeah.
So what's happening here is that, first of all, there's actually only one product that you can actually, that there is a law that you cannot withdraw the money before a certain age. So a retirement annuity or pension fund or preservation fund will not allow you before age 55 to withdraw the money out of the plan or the product. So that's the first thing. The second thing is, I think financial education is so important that we do realize that after 5 years, as she said, is that there's certain costs involved, like there's commission and there's investment cost and the mandate cost of the investor and those type of things. So it's so important that the client must understand what is the goal that you want to achieve through this investment, and then also what will the penalties, if you can call it penalties, be on that product. And that's why you need to trust your financial advisor to educate you of what's happening on that specific product. So for me, I think the right product, and you must have a specific goal for that money.
Okay. Mr. Katama, staying with John's comment there, are there any legal implications towards an institution withholding somebody's funds?
Well, I think...
if that was even possible.
Like Mr. Kotze said, it's really about what is the nature of the product that you have taken? What agreement have you signed? What are the terms and conditions?
Yeah.
Because all those are in black and white. Now, when you come and you want to withdraw, and maybe you have invested in a fixed investment period, there are penalties. And the penalty is built into almost say that, you know, honor your commitment according to the contract, or else you are penalized. But you got to make this decision only when you are informed. Then you understand what implications involved in the decision that you want to take.
Okay. Ms. Christina, you earlier on spoke about budgeting. I think it's not just you, it's a general across the whole panel this afternoon, where we're referring to strong, dependency on a budget.
Spending plan.
Oh yes, sorry, spending plan. How, we have been indoctrinated with the budget term and spending plan. Yes, so how long do you believe is a safe period of of a spending plan, if I can call it that. Would you say it's realistic for somebody to have a spending plan that spans over a year, or is it better to have them a bit, covering a shorter period? What would you advise?
So personally, I think before we get to the duration of how long your budget should be, people need to get to a point where you are doing your budget based on the actual expenses. We are so quick to make a budget and it doesn't work, we just chuck it aside. So with thumbsuck, I think most of the time rent, car, house repayment, those ones are fixed costs.
Yeah.
But entertainment, groceries, we just thumbsuck every month. So I always tell people, the first 3 months of the year, if you don't have a a standing budget that you can realistically, someone can wake you up out of your sleep and ask you, how much do you spend on your variable expenses, for example? The first 3 months of the year should always go towards recording your actual expenses so that from there, you can then derive what your budget should realistically be. And then from that point onward, I personally think a quarterly basis is a good period for you to do your budgets, because when you do it month to month, you're sort of like in the too much into the detail. You don't step back, and by the time your bank account is empty, it's already the next month, and the cycle just continues. But if you do it on a quarterly basis, you get to reflect and say, okay, over the next 3 months, what are my savings looking like? What are my debt repayment looking like? So that you can see how you're tracking with reducing your debt, how you're tracking with accumulating your savings, and you also have enough time between month 1 and 3, such that if you are really going out of budget all the time, you can reflect and adjust so that within the 3 months, you would have made some corrective actions.
Yeah.
So month on month works, but it doesn't give you enough time to reflect and take corrective measure. Whereas 6 months, you tend to get too relaxed. You have a budget there, it's set, but if you do derail and you don't go back on track, and it's already half of the year gone. So I do think, personally, a quarterly basis is a good basis to work with. Yeah.
Okay. Wow. Quarterly basis. We're not very good at this. We are learning today. And I think it's a good time to start learning so that you can start practicing for the year that is to come. And Mr. Kotze, you earlier on spoke about some of the offerings that your institutions, yourself, Old Mutual, and maybe a few others out there make or provide for their clients. And herewith, we would like to then find out, do your institutions provide any packages for persons who would like to save for, let's say, festive season, holidays, or so on? For example, I want to save for a holiday, but I'm afraid that if I keep this money in my bank account or under my mattress, I might tap into it. Do you then maybe provide those type of safe pockets for your clients?
Yeah, I think both us, Old Mutual, and all the other companies out there really had a lot of offerings. But I think we need to go back one step, and I think the public need to know that you need to determine your risk profile before you start investing.
Okay.
And that's where we determine, is it a conservative investor, is it a moderate investor, or an aggressive investor? And according to that, you invest in the different funds that's available.
Okay.
So I think that's the first thing that the public must know about. Yeah, there is savings products. There's unit trust. The thing about unit trust is that temptation of going and get the money and take the money. That's difficult for everybody.
Yeah.
But we need to have that kind of discipline and leave the money there for that unforeseen circumstances that can happen. So the unit trust is another thing. And then I think it is important that people need to know that the fifth wonder of the world, or the seventh wonder of the world rather, is compound interest. So you need, if you want to save money, you must have time on your side. You will never make easy money over a year. You need to understand that if you put away some money, rather plan 3 years from now than planning for 6 months. If you want to plan for 6 months, you can put that money in a bank. It's definitely going to be better. But if you're going to save for a specific goal, you want to go to Italy or would have liked to go to Qatar for the
for the World Cup.
for the World Cup. there is products for that. So if I can summarize, unit trust, normal savings, and then there is products for pre and post retirement.
Okay. Mr. Katama, anything to add to that?
Yes, just to add to that, I mean, like Mr. Kotse said, we also have a number of savings solutions at a very affordable rate that consumer can actually grow their money and especially save for festive season. But let me also maybe just clarify the difference between investing and saving. I think that's key. When you are investing, you actually put your money away, and you investment give you opportunity to really make your money grow, as opposed to savings where you keep your money safe. Obviously, you earn some interest rate, but investment plan don't just earn interest rate. They deliver return on investment. So coming to specific proposition and solution, obviously, I mean, we have solutions that enable you to save a minimum of $100 in a unit trust. Obviously, as it's free, you can take your money anytime, but you are investing. Just remember, you are investing. You shouldn't put your money there and take it the next morning.
Exactly.
If you have a little bit more, you can save 500 Namibia dollar into max investment savings. Or if you have a particular goal in future that you want to achieve, you can take a much longer term view, and you can save 200 Namibia dollar into our future investment offering. I mean, future investor offering. But it has a fixed investment period to achieve that particular objective.
Okay. Ms. Christina, can you just explain, basically, what a debt consolidation loan is? Give us a few examples of its advantages and disadvantages.
Okay, so consolidation in layman's term is taking different pieces of things together and putting it in one and hoping this one is better off than the individual pieces. So in a loan context, you have a consumer that is indebted to lender A, perhaps FNB, Bank Windhoek, and Nedbank, and this consumer may be struggling to keep up with the repayments of the individual lender, and they are seeking a loan to put together this various lender together. Let's just say, for argument's sake, this lender is now FNB. FNB will give you a loan, repay off your existing lender, and then you will be indebted to FNB. And hopefully what that does is it helps you to be able to manage your repayment better and sort of give you breathing room. So the advantages are that if you are at risk of defaulting with this various lender, you are now in a better position because hopefully your new loan would have a lower repayment, you are able to better manage, and it also protects your credit score because you are not defaulting on any lender. And when you default, these things are reported to the credit bureau, and when you want to get a loan in future, it is essentially expensive. So the disadvantage, though, is that it might be expensive to consolidate the debt, in the sense that because you are now breaching your loan agreement with the multiple lenders, the new lender has to pay some sort of cancellation fee or bank charges to cancel those loans that they will then factor in the new loan. Or they might give you a longer repayment term to try and help you with your monthly repayment, but the interest rate that they are charging you is slightly higher than what you would have paid had you sticked with your original lender. So it is something that you need to go to as a last resort, because it doesn't solve the problem. Your debt still stays there. It just defers it into future. So people need to be aware of it, so that in circumstances where they need it, they can access it. But you must also be aware that you need to qualify for a debt consolidation. There is a risk that you go to, FNB seeking for a debt consolidation, and they could rule you out and say, sorry, you are too high of a risk, we can't take you on. Then that means you must still stick with your original lenders, and perhaps you must go and make debt arrangement to the various multiple lenders and say, look, I am at risk of defaulting. Can we maybe push out my repayment term so that my loan repayment can come to a sort of a slightly cheaper premium on a monthly basis? So a good thing to manage your credit risk, but also need to be able to make sure that if you then take advantage of a debt consolidation loan, you understand what put you into that position, because when you took out those multiple loans, at some stage you could afford them.
Yes.
So what happened that led you to the point that you couldn't afford them, and to be aware of those behaviors so that you don't get back into that trap.
Yeah.
Because you have a lot of people that unfortunately aren't using the official debt consolidator. They'll go to cash loans, they'll get money, pay off this, multiple lenders, then they have this loan to the cash loan. But because a cash loan requires you to either pay a steep interest rate or pay back in full, then they are stuck in that cycle. So you
Yeah.
need to manage so that you don't put yourself into that trap.
Okay, okay. Now, there are a lot of things that people are trying to do to try and assist themselves, as you're saying. But before I get to the other question, Mr. Kotza, she spoke about cash loans and multiple loans in various places. From your experience, how would you then advise that a person tries to stay away from these?
This is a difficult one. Let's be honest here. Especially in the festive season. And especially with Black Friday coming up on the 25th.
Thank you. I still don't understand the date placement of Black Friday, but it's okay.
What we will, and I think all of this is something that is part of planning and is part of financial education.
Okay.
Financial literacy
Yeah.
will play a huge role in making that decisions. Because I do not know if my colleague can add on to that, but if you look to a pay slip, it is just all this cash loans sitting like that, and people really do not know when to stop with that. And it is so important that people realize that all that money fall into a black hole that is just too deep to actually solve the problem. So I do not think I really answer the question, but it's a problem. And we can do that, I think, through financial education.
Okay.
And maybe just to complement on that, I mean, taking a loan in itself is not bad.
Yeah.
It is what you use the loan for.
Yeah.
Do you use the loan for a productive purpose, or do you use the loan for mere consumption?
Yeah.
Remember, it is very, very easy to spend the money that you don't have.
Exactly.
Just because you have a credit card, just because you have an overdraft facilities, you use that. But guess what? January will come, or
Exactly.
January will come,
Yes.
and the bill will arrive. So it can be painful, especially when considering the higher interest rate environment in which we are now. I mean, people pay a lot of money on the borrowed money. Yesterday, I was looking at some of the Bank of Namibia's report. I mean, Namibians are highly indebted already, spending around 77% of their disposable income, servicing debt in 2021. That's quite high. So that's why it's very, very, very important to take time to really determine, I mean, how much you can really afford.
Wow. I like the fact that Mr. Kotze said it's a black hole. Because immediately my mind went to, it's a black hole in the sense that you've got nothing tangible at the end of it.
Nothing at all.
And being aware of what you're using that loan for is also highly important. I'm taking away tips here. I'm trying to save my money as we approach the 1st of December. So I'm definitely absorbing like a sponge today. Ms. Christina, there is a very exciting phenomenon that has arisen over the past few years. It's something that many attach it with gogos and kukus. It's called stokvels. Hear me out. So now the new concept that has gone around is creating stokvels for holidays with regard, especially festive season. A lot of our natives are people who commute back to the farms over the holidays, whether you're going back to the farm or to the village or so on. It's somehow always a travel back home somewhere, as we call it. And many of these stokvels are now, have moved away from the concept of money and money payouts on a monthly basis? Because remember, we had those rotational stockfields every month. Somebody gets a payout type of situation. Now they have moved to the purchasing of groceries on a monthly basis with collected monies. And this money, or groceries, pardon me, is distributed at the end of a particular, period, especially the 12 months period. Or some that are still doing it with money have ceased and moved away from monthly payouts, and they do over the holiday or festive season period payout. So it's like a small savings type of situation. Now, I just want to know from you, what is your take on this initiative, first of all? And how would you then advise people to form these safely? And also, for those who already have them, how would you advise them on, manners in which they can strengthen them? We've got a very limited time left, sorry, I'm being told, but I'm stealing time now. Hopefully they'll allow me. So can you just give us a few of those quickly?
The stock vaults are quite tricky at the moment because some of them are breaching the regulations of Bank of Namibia. That's why Bank of Namibia sometimes come and say the WhatsApp stock vault is illegal. So we need to make sure that whatever we are doing is within the ambit of the law. And when Bank of Namibia has come and declared this illegal, our money doesn't vanish in thin air.
Yeah.
So the one thing that I really would caution people is you need to ensure that the community that you are joining is at least made up of people that you are familiar with and people that you trust. Because with the use of social media, it's just a group, WhatsApp stock vault, join with 600, get 800 out. So those types of quick rich scheme type of tend to, disappear quickly.
Yeah.
But also, if you think about a stock vault in a nutshell, I think the concept is let's encourage each other so that we can encourage the savings community, so that we can encourage the saving discipline. So if you can get to a point where even if you are doing it in a group, each one can still do it in their individual bank account, or they can do it in a legal structure, or doing it. I think some banks even allow collective bank accounts where you deposit money and you can. The moral of the story, it needs to be structured. There needs to be rules and regulations such that you guys are operating on trust, and when that thing needs to dissolve, it can dissolve in a sort of like a productive manner. No one is screaming or scratching. No negativity around it.
No losing.
Yeah, no losing involved at the end of the day. And also, hopefully, you are also not putting money throughout the year in something that's losing value. At least put it in a bank account where even if the money isn't growing rapidly, you are earning some sort of interest, so that in December you have some sort of addition on top to what your initial capital was. So that's my short and long story for the stock vault. But bear in mind that Bank of Namibia has rules and regulation that can declare these things as illegal if they find it as such. Yes.
Okay. So my takeaway from that is analyze what it is, make sure that you're not falling into a pyramid scheme, and also make sure that it is a safe space that this is taking place in. My time has run out. I am being told to wrap it up, so I shall do so. I'd like to thank our panelists for gracing our stage this afternoon, and thank you very much for coming on at the right time, I believe, so that you can save us a few pennies for January. Thank you very much. From myself, Desire Kahia, along with my production crew, it is bye-bye. Till next time.